We start things off today with a look at inflation, which I'll just summarize as worse than expected, terrible for the party in power as we move towards the midterm elections, and a signal of what I think is a lot more pain to come. Energy was the one bright spot, which isn't likely to last for reasons that I won't get into right now, while service prices, food, and shelter are at levels that are best described as crazy high, with several numbers in particular related to housing and rent inflation now at all-time levels going back to the start of when they kept records. But enough for me. Here are some hot takes from analysts at big financial companies in response to the news. Mohamed El-Arian had this to say, quote, once again, hotter than expected U.S. inflation numbers for both the core and headline measures, and therefore bad news for the Federal Reserve and markets, and more importantly, the economy, and especially the most vulnerable segments in society. And I'll skip the other ones because we're in a rush here, and I'll just quote Seth Carpenter, chief global economist at Morgan Stanley, who said, quote, this was clearly a shock for markets. If ever there's a time for people who do economic forecasting to be humbled, this is it, end quote. Will, do you think that there is any other light to read these numbers in today?
Nope, only depression is the way to read these numbers. 40-year high, once again. We've been reading that for, I think, a year now. 40-year high, 40-year high, 40-year high. Let's look at the numbers itself. So 8.2% year over year, an increase about 0.4% month over month. Forecast was 8.1% year over year, and increase of 0.2% month over month. So not great numbers. To me, it's always hilarious. They do like these little forecasts, and they're like, it's not going to be that bad, guys. And then it's always a little bit worse than they're expecting. I don't even know why they do a forecast at this point. What I am interested in knowing about is once we get past like this year-long period, and when we're having like inflation numbers year over year, where it's been over 10% or been over 8% for a year, it's just going to go back to like, oh, inflation's not that bad. Year over year, it's only up like 0.01%. That's how numbers work. So we'll see what happens there. Zach, I'll kick it up to you.
I just want to talk about the really little dollar that was in the photo attached to this story. That is such a cute little dollar. Oh my goodness. And you know, the context here is we're talking about the Bitcoin. Remember, Bitcoin is an inflation hedge. Bitcoin is not doing that. It's not there yet. It's not working that way. And all-time high inflation, or not all-time high, but high inflation in the last 4 decades, it's proving that even in that environment, Bitcoin isn't doing the anti-inflation thing. People aren't parking their wealth there in a way that's meaningful. We see Bitcoin failing to crack 20,000. It's 18.9. It's not good at all.